Hello, Uncle Jim here. Today I want to share with you a great way to make passive income, and that's selling put options. Did you realize that people will pay you money to actually buy stocks? I'm going to share with you how that works, my strategy, and I'm also going to, at the very end of the video, share with you some trades that I did this week. So stay tuned. I think you're really going to enjoy what I have for you today. Now, before I jump into the details for the video, you're probably wondering what is this above me here? Why do I have a picture of a lizard? Well, this relates to a new trade that I did, at least new for me, and the lizard above me kind of reflects that. So I'm going to actually talk about that trade. It's called a reverse jade lizard. Some people also call it a twisted sister. So again, I'm going to share with the details about that trade at the very end of the video and why I decided to make that trade. So let's go ahead and jump in. I've got a lot to cover. So first of all, with doing cash secured puts, like in the intro, it's amazing people will actually pay you money to buy stocks. Now, before you actually sell a put option, you do need to have some basic facts in place. First, you really need to pick good quality companies. For me, a quality company is a company who has good earnings, a good return, has little debt, and typically, is a well-managed company. I also like to stick to lower prices. I try to avoid really expensive stocks that are over, I try to keep it under about $150, or if I can't, under $100 for the price of the stocks that I'm looking at. And part of the reason for that is I did get in trouble with a trade I did probably over a year and a half ago, maybe even as old as 2 years ago with Microsoft, which at the time was $240, $250. So, and then also dividends. I'm a dividend investor and I really like earning dividends. So, part of my goal is not just earning passive income selling options, but also to earn really good dividends, which I think is probably the most passive way to earn income. Now, in order to sell a put, and again, let me just describe what a put is. So, say you've got a stock like Coca-Cola and it's currently selling at $50 a share and you want to buy it at 45. Well, you can sell a cash secured put to someone and they'll pay you a premium for the opportunity to sell you those shares. And typically it's always in 100 shares for each contract. So if you do two contracts, it'd be 200 shares, three contracts, 300 shares, and so on and so on. So I don't do anything without having enough cash in my account to cover my trades. So you'll hear other people talk about doing trades that are called naked, and those are when you don't have enough cash to cover your trades. And I typically don't do that. I have some exceptions here and there, but for the most part, I typically have enough cash to cover my trades. Also, I pick safer trades. At first, when I started selling these puts, these cash secured puts, I started with more like a 20 delta, and since then I've gone to a 15 delta. So you might ask, well, what's a delta? I've never heard of that before. It's a Greek, it's a probability of that stock being assigned to you, and being assigned to you means, so when you sell a put, you pick a certain strike price, and we'll talk a lot about the trades I did at the very end. Well, I'll share with you even more about strike prices. So the strike price would be 45 in the example I just mentioned. So it's a probability that if the price of Coca-Cola goes below 45, you would be assigned those shares. So it's so for a 15 delta, it's like an 85% chance that it will not get assigned to you, or a 15% chance it would get assigned to you. So at first I was doing 20%. Due to the bear market, I've lowered that. I've also gone with slightly longer expirations, primarily because the farther you go out, the lower a price you can get. So again, lowering your risk. So let's use another example. So with Coca-Cola, say you wanted to own it at not 45 but 40. It's currently $50 a share. If you go a little farther out, you can still keep it at that delta and still pick up more premium, or the premium you want to earn. So by going out farther, you can maybe get $100 in premium for a $40 strike. Whereas if you're only going out a month, then a 15 15 delta would probably be more like $40 or $50. So the farther you go out. Now the negative of that is, yes, you may make more premium, but if you could do, you could sell a put every month, you could potentially do better. So if you earn 50 each month, you can do better than earning 100 after 3 months. So 50, 50, 50, 150 versus going out 3 months and only earning 100. So it's always a game of, what kind of return you want to earn, what kind of risk. And again, during the bear market, I've gone farther out. Since I've switched to doing 15 deltas, I've had very few shares get assigned. I might not have had any get assigned. Most of what's been assigned to me over the last year during the bear market is the trades that I did at a 20 delta. So again, it's important for people to pick, what kind of risk they want to take. And the lower you go delta wise, so a 10 delta is safer than a 15, a 5 delta is even safer, a 25 delta is more risk, you'll earn more premium, but a good chance you're going to get assigned, and so on and so on. So, and that's where in the next footnote here, the assignment risk is what you're trying to avoid unless you want to own the stock. So there's another strategy you can do called the wheel. And if you really want to own the stock, then you could potentially take more risk because the stock is something you want to own and it's at a price you want to own it. So you're willing to take more risk and earn more premium in order to potentially get assigned because your goal is assignment right off the bat. So a lot of times I sell puts just to earn cash, but I probably have made a mistake and sold too many and not let enough get assigned, especially when we were at such good lows back in October, good or bad lows, depending on how you're looking at it. So I might have missed some opportunities of picking up some stocks even cheaper, but again, the ones that were assigned to me, most of them have been going up as of recently. Of course, this week's been rough, but last week went up quite a bit. So a good number of the stocks that were assigned to me are, out of the money or higher than what the strike was when I originally had it assigned to me. Now, one thing that's also really important is, and I didn't realize this when I first started, is you don't need to just let it expire. You can actually manage the trade. So 3 weeks out, I have a spreadsheet that I use, and again, I'll show that at the very end of this video. And I start planning about 3 weeks out. So, anything that's expiring the very end of January going into February, I'll start putting on my planning worksheet, and I'll start planning on how best to deal with that specific position. Do I want to roll it? And roll it is just simply closing your current position, opening a new one, and earning enough premium to cover closing your position. It all comes down to, opening and closing puts and calls, and of course today we're talking about puts, but the last video was that I did last week was all related to calls. So so in a lot of cases, you may find you want to let them get assigned if they're in the money. And typically you don't, if it's way out of the money, and I do have a lot that expire outside the money, it's okay to just let them expire if you prefer to do that. But, if you start planning, then you have more choices. So I found that you can earn more money if you start planning and potentially close or roll at the most opportune times. So in a way, you can kind of work your brokerage a little bit better and make a little bit more money. So an example would be, if you pick a percentage to close. So if you're profitable, say at 50%, when it gets near expiration, you could potentially close that trade or those positions at that time and open a new one and make even more money. So in a sense, instead of doing, one trade every quarter, you're doing, 2 or 3 trades every quarter, one trade a month versus, letting things expire and not really working your capital to its fullest extent. So next, let's actually jump into my trades and my spreadsheet. I'll go into a little more detail. It's a little bit easier when you have examples in front of you and you can go into a bit more detail. But I do want to mention, please subscribe, hit that like button. I do have memberships. They've been growing. I've had a lot of people signing up even for the higher or more expensive membership to get the coaching. So I think I'm doing 4 or 5 coaching sessions this week, which works out really well. I really enjoy talking with people. So if you're interested, take a look down below. All the details will be there. So let's jump into that next part of the worksheet, or not the worksheet, the video. Thank you. Okay, I've opened up my planning worksheet. This is what I released to my membership on Monday, this past Monday, and I'll just go over it briefly just so you kind of have an idea of what you're seeing. So up at the very top, again, just the title, the date that it's actually released. Here are my weekly goals. This is my current monthly goal. So weekly, I'm trying to earn 1,000, 4,000 monthly. And then currently I'm at 2605 for the month of January. So hopefully my goal is again 4,000 for the month. Hopefully I'll be close to that. I probably won't reach it. I may be more like 35 or 3600, but my goal is to reach 4,000 by the end of the year to become a better trader. But let's jump into the rest of the spreadsheet. At the top, I have my top stock picks. This is the list of what I provide, and I provide pricing, current price, the short strike, the outer strike, expiration, the delta, what the premium typically would be. It's kind of an estimate. And then a little bit about the company. So this week I had suggested Cisco Ford. Cisco is one of my favorites, probably of all time. I probably have sold more puts and owned Cisco. And again, I just really like the company. They seem to have a very, very well managed company. Ford, I also like. It's inexpensive, really good for small companies. Devon Energy is another good company. I, again, have sold lots of puts on it. I don't own any currently. This is one of those scenarios where I could have picked it up earlier, but I've done really well just selling puts on it. So at some point, I may want to let that get assigned and take a little bit more risk. And then Coke will be the discussion about the reverse J lizard that I'm going to talk about here in a minute. And then I list the deltas, and I list the average at the bottom. So for the ones I was suggesting, the delta overall, the average was 18. So it's really hard to get a true 15 delta. So it's usually around a 15 delta. So I did do a Coke trade. I have not done a Cisco Ford or Devon trade this week, but again, they're kind of on my list with the fact that the market's been a little bit crazy this week. I haven't been able to find really good premium. I haven't looked a whole lot today actually because I've had so many other things going on. But let's jump into the trade. So the first trade that I've done this week, and I did it back on the 17th, and so you could see I provide all the different information in the planning worksheet. And I did 2 contracts, and this was a new one. It's a vertical put credit spread with short strike of 70. So that's the one I sold to earn premium. And then the outer strike was 60. So it's a $10 spread with a delta of a little bit high, 0.193. So not quite a 20 delta, but probably a little bit higher than I typically like. But SCHD is an ETF. It's my favorite ETF. It's primarily of dividend growth companies, and it typically does very well, and I always want to own more of it. So I don't mind taking a little bit more risk with it. Expiration 7/21. Again, I went a little further out to pick up the premium and lower the strike prices. Current price was 77, so I'm looking to pick it up at 70. The current price is 77. So for this, I got premium of 150, 140. The required margin or cash was 1848, and I got a 16% return on it. So you'll notice this is the lowest return I would do compared to all the other trades, and that relates to the fact that the expiration is so far out. So let's jump down to the next one, which is Coca-Cola. So this is the new trade that I did. This is the reverse Jade Lizard or Twisted Sister. I'm not quite sure why it's called Twisted Sister. If you know why, please add a comment below. Found it interesting when I started looking into it more. Well, I didn't know what it was called. It's actually 3 trades in one. And I actually posted it to my membership, and one of my members knew the name of it, and sure enough, that was the correct name, the reverse jade lizard. And then when I looked it up, I found more information about Twisted Sister, which I don't know how that relates, but again, if you know, please add a comment. I did this trade also on Tuesday, the 17th. It's a new trade. It's a custom three leg. So in a sense, with a custom three leg, I sold a call and I did a vertical put credit spread. So, and for the covered call, and the reason it's a covered call, so it's even a little bit more unique than just the reverse um, jade lizard, is because I own a lot of Coca-Cola, so I don't really need to buy the outer, buy the outer call because, like I said, I've got so much Coke that I'm okay with it being assigned if it gets assigned. But I've worked with Coke so much, I typically know what the risk is for it to get assigned, and at 67.50, I don't have a whole lot of risk of it getting assigned. I know I can roll it up in a way if I need to. And then at the same time as doing, and these all expire the same day, I also did a vertical put credit spread at, I believe it was at 55.45. Yeah, here's the 45. Since this is new, I didn't quite know how to write it up completely. And then I put on here the deltas. So for the covered call part of this trade, it was a 21 delta, which again, right along my typical deltas that I like to do for calls, which is around a 20 delta. And then the put was a 17 delta related to the $55 strike price. And I don't think Coke will go that low, but it might. It was down quite a bit yesterday. I think it was up today. I believe it's right around 60 or 61, so it has dropped a little bit. But it could. What I found is when it does drop anywhere near 55, almost all my covered calls become very, very profitable, and I can start closing them left and right. So the current price when I did this trade was 62, and like I said, I believe it's gone down a little bit more below 60. And I did this on one contract. Since any new trades that I do, I typically only do it on one contract just so I get a feel for how to do it, and then I'm doing everything correctly. But what's interesting is I ended up picking up quite a bit of premium, almost $150 in premium for those that three-legged trade. And I tried to figure out the margin. I don't know if this is correct, but it looked like I just did it on the vertical put side, which I'm not quite sure how to figure out what your required margin or cash would be. But if it's just on the vertical put side, then it would be almost like a 42% return, which I guess I forgot to put the date, but I think I put it at here. Let me actually add back the formula bar. 150 days. So I did go a little farther out. It's 150 days. It must be right around July, June or July. So I can't remember the actual date, but it is a little farther out. That's why the return on that one isn't better. But again, that's one contract, um, to be able to earn that kind of premium, which is really nice. So that's my Jade Lizard, reverse Jade Lizard, Twisted Sister trade. So it's even hard to say. So next I did a trade. This was yesterday on 118 on Schwab. Now what happened today is Schwab dropped big time. I think it dropped $4. I'm still out of the money, but I did a short strike of 72.50. This is a vertical put credit spread with the outer strike at 62.50. I believe it dropped all the way down to 76 or 77. So if I had done it today, I would have earned even more premium and done even better. So again, with patience, if I had waited another day, I potentially could have done a lot better. So I don't know. It's probably earnings. I thought, well, I'd already noticed earnings had come out, and I thought they were already reflected, but it may be a lot of people didn't see the earnings. But the earnings weren't down that much. I believe it was, instead of they were estimating $1.09, it ended up being like $1.07 or something. So it still took a pretty big hit. Now the delta at that point was a 16 delta, 0.161, expiring in March. The price at that time was $80, and I was able to pick up, what is that, 131 Yeah, I believe that's 131. Required margin, again, because it's a vertical put credit spread, was 1868.60, and it's like a 44% yearly ROI, or return on investment. So not bad. And again, I really like Schwab. I use them. That's who I broker with, and they've come in real handy with with a lot of things. I got a pledged asset line at one time. I went through a divorce, and they helped me with moving money around, so I didn't even need to get an attorney involved. So I don't know. They've just come through in a number of ways. I've been really happy with them. And again, their numbers look pretty good. So let's move this down a little bit. And the last one is one I did today. I actually did it about an hour or two ago. And today's January 19th, 2023. This is IWM, which is the Russell 2000 ETF. And this is kind of a new trade for me. I'm also kind of like the Jade Lizard. I'm starting, and this kind of breaks my rules a little bit. I don't really want to own IWM. I just want to see if I can make some good income with it, using my standard guidelines, and see if I can do quite well. I sold one of these 2 weeks ago, and I think I made over $100 on each contract, and I think it was close to 100% return for a yearly return. So I'm playing with this. This does break my rule. I don't really want to own IWM, but I wouldn't throw it away, if you know what I mean. I think it's really good, and it's got lots of premium, lots of strikes. It's a really good ETF to actually sell options on. So I did two contracts, a vertical put credit spread. The short was 165, the outer was 155. The delta was 15, so right there at my 15 delta, being it has so many strikes, you typically can find a delta that's really close, whereas some of the others, it becomes, you can't quite find anything quite near a 15 delta, maybe an 18 delta or a 13 delta. But with IWM, there are lots of deltas, and you have more options to choose from. So expiring on March 17th, I picked up the current price is 181. I think the 52-week low is right around 162.50. So the 165 is fairly close to the 52-week low for this ETF. And you can see I picked up just shy of $190, and only needed about 1,800 in cash or margin, and this is like a 65% return on investment for the year. So one of my better trades. But like I said 2 weeks ago, I think I got closer to 100%. So, and these are the trades I've done this week with vertical put credit spreads. I brought in 621. Now I have the rest of today and tomorrow. My goal is typically try to get 1,000 a week. But this is, like I said earlier, a new goal. So I don't want to put myself in a bad way. So I may do one or two more trades either this afternoon or tomorrow. But I'd be okay with 621, because I haven't, 2 more weeks left in January. So I should be able to easily meet, well, probably not meet the 4,000, but I should definitely do better than my previous goals, which were 3,000 for last year. So I'm not too worried about it. So that's my planning worksheet. This is, again, what I provide to my memberships. And this has worked out really well for me. It's allowed me to keep track of what's coming up and what I need to manage. And, it's helped me avoid, taking big losses or having things assigned that I didn't want to assign. So I hope you enjoyed this. If you have any comments, please leave them below. I try to go through all my comments and will reply to them. So I hope you enjoyed this, and I hope you have a wonderful day. Thanks for joining me.